Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of November 27th through December 1st, where we will try to help you find some Cyber Monday stock market deals. So we hope that you all had a very happy Thanksgiving holiday with your family and friends and are doing well, enjoying the Thanksgiving holiday weekend, and we'll get ready for cyber market stock market deals. So let's get started. Welcome, Easy Mike, Gerald Fitz, MD. Thank you all for joining us in the live chat today. Hope you all had a very happy Thanksgiving. Welcome, Brian Moritz. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of November 27th through December 1st. We keep our notes in publicly accessible Google documents, so you can refer back to these notes in the future. Our notes contain links to bonus video, links to the tools and resources we use to do our market analysis and help us find these Cyber Monday stock market deals. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weeks, and you can find a direct link to that public Google Drive folder also in the description box below. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. Hope you had a happy Thanksgiving. So let's see how the markets ended up on the shortened trading day on Friday. Again, shortened trading week, closed at 1 p.m. on Friday for Black Friday. So we can see all the indices pretty flat, pretty low volume, as we talked about with trading holiday weeks. Tends to be low volume. People are on vacation, traveling, etc. So it was a bit choppy, pretty much flat across all of the indices. We did have 62% advancers, 31% decliners. We've got 80% new highs, 20% new lows. We've now got almost 70% above their 50-day moving average, only 30% below, and almost 50-50 split above the 200-day moving average. So although this shows pretty much bullish, as we had the surge at the end of the close at 1 p.m., it was pretty flat, pretty low volume. During the day, we saw rotation out of the Magnificent Seven, out of the mega cap tech firms, which is not terribly unexpected. On Wednesday, we saw quite a bit of a positive surge rotation into those Magnificent Seven mega cap techs. So we see all of those slight declines. Some of the news. They point out that the fear gauge hit a 2020 low, so we saw the VIX is now, I think it's in the 13s. Steep decline we'll see in the VIX, so we see, fear gauge is very low, so a lot of positivity, a lot of greed in the market right now. See, oil has been pretty much range bound between 75 and 80. It dipped back down to that 75 level. It's been kind of bouncing between 75 and 80. Natural gas did break down below 3. You can see it retested, breaking back above that 3, and we'll see in the futures it looks like it's swinging back up. Gold's trying to hold above 2,000, so it broke above 2,000, is now establishing a support at 2,000. And we see the indices futures are positive for the Dow and S&P and slightly negative on the NASDAQ. We also saw the dollar eventually declined. So I think DXY last I saw was in 103. It's been bouncing around 103, 104. Treasuries had declined to the low 4.4s. We see a little bit of recovery on Friday, and we can also see it's inverting more again, but Treasury yields have been quite low, so prices did have a slight recovery, except on Friday, again, we saw a little bit of a bounce in the yields and dip in the price. So we'll look at the groups, the sectors, the industries. So on Friday, again, we saw the sector rotation out of technology, communication services into healthcare energy. So again, from the weakest performers, rotated money in. Strongest performers, profit taking money out. Real estate's been kind of in the middle. So again, for the week, again, a rotation into energy and healthcare, somewhat out of technology and communication services. Although for the month, again, so you see the weakest performers for the month. We got this rotation the end of November. And again, for the quarter, we see, healthcare, technology, communication services were the strongest, and healthcare was pretty weak. Energy kind of in the middle. So, again, we're continuing to see this rotation, seasonal rotation as well into energy, and I would expect that to continue. Look at some of the industries. Again, we'll see this bounce in silver. Gold had a slight decline yesterday. Again, it's establishing support at 2,000. Some of the REITs performed well despite that increase in bond yields. The weakest performers, copper. Again, solar's been underperforming in general. We see occasional, an attempt to push back into solar, but in general, it's extremely weak. Energy, again, strong for the week. Silver, uranium's been holding up relatively strong. Some real estate, poor. Office, we don't like office real estate. You can see many more advancers than decliners. So for the month, real estate's generally strong. For the month, oil and gas weak. Again, we saw, oil broke back down below 80, down to 75. Again, we had that delay in the OPEC meeting. It's been delayed to November 30th. So that caused somewhat of a decline in oil, as there's some, disagreement with some of the African OPEC nations as to their quotas. So that may continue some downward pressure on oil. Again, right now it's kind of bound between 75 and 80. We'll see if it breaks down below 75. But again, they've got that OPEC meeting on the 30th, and if they cut production, that might give it a pop. Again, for the quarter, uranium's been very strong. Energy in general, real estate making a comeback. Again, solar very weak. Office, real estate very weak. Okay, I'll bring up the economic calendar from last week. Again, it was a little bit different this past week with the holiday in the middle of the week, and I'll talk about some of the notable economic data, and then we'll also look at the economic data coming up for the following week. Grab a quick drink. Welcome, Nug M, Sydney Osborne, The Crow, Ellen Krantz. Thank you all for joining us in the live chat today. Hope you had a happy Thanksgiving and are doing well. So we see economic data we got on Wednesday. Mortgage rates declined. Again, Treasury yields dropped down to 4.4. So a decrease in the mortgage rate, I expect, and I think we're starting to see, a quick surge in home buying as the mortgage rates drop a little bit. I expect if we get a further drop in bond yields, mortgage rates, again, we'll see a brief surge in home buying, taking advantage of that opportunity. Saw durable good orders was flat. It was expected to be up. Again, we're seeing, slow decline in the economy, big purchases, durable goods declining. We also got initial jobless claims data was less than expected. So again, the job market continues to hold up. The average is pretty much in line. So again, just more evidence the job market is resilient, holding up quite well. So again, the Fed doesn't have to worry about high unemployment right now, but the economy continues to cool slightly. We did get this Michigan sentiment. It was a little bit, their 1-year inflation expectations was a little bit higher than expected, but 5 years pretty much in line. Their expectations in general was a little bit below, but pretty much in line. But sentiment is for November was more positive than expected. So again, consumer is expecting higher inflation for a bit longer for the next year or so, but they're not terribly worried about the economy in general. Again, Thanksgiving, the markets were closed. Friday, the markets closed at 1 p.m. We'll look at some of the other economic data from last week. Bill auctions look like they didn't do too bad on Monday. Again, existing home sales a little bit below expectations, probably supply issue. Crude oil stocks rose, so again, more downward pressure on oil. Talked about durable goods, jobless claims, expectations. Again, crude oil inventories rose. Natural gas inventories were pretty much in line, but down, or well, it wasn't in line, it was negative, and it was expected to be positive. So again, then we saw a slight bounce in natural gas prices. We'll see that swing back up. See the rig count steady now. So we had seen a slight raise. Total rig count did go up a little bit. So again, trend has been up in rigs in the U.S. So again, if OPEC cuts their supply a little bit, again, we might fill that in with U.S. supply. In general, we'll look at the futures for natural gas, but as we'll see, there's a swing back up. We'll see in the futures, very nice little trend there. So let's look at the economic data for next week. So building permits on Monday, again, we might get a new home sales. We might get a little bit of a bump in new home sales, starts, etc., due to the decrease in mortgage rates. But again, short-lived as the mortgage rates oscillate. Tuesday, again, home prices. I hear home prices keep going up. Again, supply, a lot of demand, very little supply, and mortgage rates are very high. Still got some Fed officials talking, so that will create some level of volatility if they continue to come out, a little bit more hawkish. Get crude oil, mortgage rates on Wednesday. GDP for Q3 on Wednesday expected to be pretty flat. So again, not negative, not recessionary, but flat. Consumer spending, so we'll get a read from Q3. We'll also be hearing this data coming out from Black Friday, from Cyber Monday, how the retailers actually did in terms of traffic, volume, etc. So there's some volatility in the retail sector. Thursday, we get jobless claims and PCE data. So again, PCE is one of the primary indicators the Fed uses. And Chicago PMI, natural gas storage, again, more Fed speakers, ISM manufacturing. I expect, again, manufacturing to kind of be slow. Consumer, I expect to continue to be resilient through the end of the year. Again, none of this is financial advice. We're not financial advisors. All of our content is provided for education and entertainment purposes only. We also still have earnings going on, so you can see the full calendar of earnings here in investing.com by hitting the earnings tab. Got Zscaler, got some software technology. It should be winding down. We've got, I believe, all the Magnificent Seven have reported. All the mega cap tech stocks have reported. So I think that will, dampen the reaction to earnings. But again, it's always worth knowing who's reporting when and what impact that might have on your trading decisions, on your portfolio, etc. So again, should be winding down now. Also, I heard that causes a opening in stock buybacks. They're not in their quiet period for stock buybacks. So those companies with large stock buybacks, if their stock is significantly down, they might take this opportunity for a stock buyback. So you can go through this whole list at investing.com. If anybody knows of any significant earnings, you can throw that up in the chat, our Discord, etc. And then we'll get to the shortened earnings calendar in Webull in a second. And just a reminder, the next FOMC meeting is December 12 and 13. So again, we've got a little bit of a window before the next Fed interest rate decision. Talked about the earnings calendar. If you want to hear more about, how we trade around earnings, you can listen to this previous video on how to make money trading around earnings. So now we'll jump over to Webull and look at the market screen. Okay, this is the market screen of the online browser version of Webull. If you're not already using Webull, they're still offering currently 6 free stocks if you open and fund an account in Webull. They're also offering 5% interest on uninvested cash in your cash account. So if you're not already using Webull, you can see we use Webull for our market analysis, our due diligence, the majority of our trading. And if you join Webull with our affiliate link in the description box below, you can get your 6 free stocks and also help support our BeachBum Trading YouTube or our BeachBum Trading community, which we greatly appreciate. So again, I'm using the online browser version of Webull. Here's the market screen. We like to look at the histogram of advancers, decliners. We could see there are many more advancers than decliners on Friday, but the percentage of advancement was quite small. So again, pretty low volume. See again the trend on Friday, spend NYSE gets inflows, NASDAQ gets outflows, so profit taking, particularly in out of the Magnificent Seven this week. So again, we've seen this trend for quite a while where outflow on Friday out of the NASDAQ. Again, you can see the earnings calendar here in the calendar section. You just hit the earnings. You can also see dividends split. They also now have some economic data, economic events in the calendar section in Webull. It looks like that's new. So again, you can see the upcoming earnings schedule and whether it's before market open, after market close, and keep track of what's coming up in the near term in the calendar section of Webull as well. Okay, we'll look at the best performing industries for the week. So see, uranium's been holding up strong. There's some of our, typical uranium plays. They're, pretty high right now, but they've been holding up quite well. Transport, coal, again, energy, retail. Obviously, we talked about the trend, positive trend in retail towards the end of the year. Again, we'll talk about that some more. Some oil and natural gas. Retailers, logistics, again, very transport related to retail. Some aerospace defense, again with the ongoing war in Gaza. Some metals and mining. Again, oil and gas. Biotech, slightly few positives. Look at the best performing ETFs from Friday. So this was interesting. We see up on Europe, up on small caps, the Russell, mid caps. So again, small caps, mid caps. So again, the trend out of the Magnificent Seven, and it looks like this rotation on Friday was into small cap, mid cap. So we've also talked about this seasonal trend into small caps, the Russell. So Dow up, S&P again, mid caps, mostly mid caps, some small caps, mixed down, Euro up. Again, Russell, small caps. And again, up on Europe, up on China. Looks like, China's a bit split. So tug of war in China. And the NASDAQ, we've got short. So SQQQ is the leverage short on the NASDAQ. So again, on Friday, we saw this rotation out of the NASDAQ, out of tech, into small cap, into mid cap. So we see uranium miners. This is an interesting one. I'll have to see if we want to add that one to our ETF Google Sheet. I'm not sure we have that UNRJ, uranium miners. That might be a nice addition. Shipping, utilities, some positive, global utilities, small cap utilities. So that's a little interesting. Technology, innovation. Basic materials, again, uranium, lithium, so a little bit of a bounce in lithium miners. That's another interesting one for miners, LITP. Consumer staples, small cap. Real estate, residential. Again, when we saw mortgage rates drop, so that's positive for residential. Got Europe financials, some insurance. So copper, shipping, a lot of silver. And when we get to the futures, I think there's a real opportunity for the bounce, the swing back up in silver. We'll see that. We see a number of silver ETFs are getting positive inflows. Then British pound, I got some alerts. The pound was rising against the dollar today. I think the euro was rising against the dollar today. So again, expect, some further decline in DXY, weakening in the dollar, which again will be positive for foreign currencies as well as dollar-denominated commodities, which we'll also see in the futures in a second. Okay, so let's look at the futures in FinViz. Okay, so we see all the indices, are running pretty exuberantly high. So it looks like the Dow's, broken its previous high, headed up. So again, we've been talking the trend for the season. Once we got into November, you can see a very strong seasonal trend, very positive. I expect this again to continue towards the end of the year. Um, and then we'll talk about, a Santa rally, talk about January effect, etc. But again, in my humble opinion, again, not financial advice, but again, my humble opinion, I expect this, relatively exuberant rally to continue through the end of the year. Welcome, Walter Lyons. Glad to see you. Thank you for joining us. So you can see the European, all the foreign markets are participating in this exuberant rally, the DAX, etc. We can see again the Russell's been a little bit lagging, but it has finally broken out above its previous high. Looks like some consolidation, so we'll see if it loops back up again as well. Until we get into the season where we have tax loss harvesting. And we'll talk about that in our strategies and what impact that may have on some of your stocks, particularly your small cap stocks that have lost a lot during this year. Yeah, we see the steady decline in the VIX, now below 14. You saw the news. Fear gauge is at a multi-year low. So again, a lot of greed, very little fear. So unless we get some global event or something, we expect volatility to stay down, trend to be up. And we see oil's kind of range bound between 70 and 80, or 75 and 80 really. We have a slight dip below 75, but pretty much range bound, and we're waiting on that OPEC decision to see if we get a pop and then a further drop, or if it continues to decline. I don't know if it was Gerald, I think, asked about the loop in natural gas. So we got a rollover in the futures, but you see this little trend. It tends to dip down, swing back up. So I think, again, the uptrend will continue. We see a slight breakdown below 3, but it looks like it's attempting to regain 3, and I expect, a swing back up. Again, the seasonal trend is up. We saw that the storage was down, etc. So, but you see this trend, once it loops back up, it looks like it'll, it's tried to break the 360 level. So significant resistance of, 320, 360, etc. Again, we saw gold, it had to work to break 2000s, consolidating around 2000 again, eroding that resistance. But again, very positive trend, and seasonally the trend is up. Similarly for silver, finally broke above 24. Again, it had to, work to break that resistance, finally broke that resistance at 24. Now I think there's, opportunity for upside up to 25. And again, further upside from there. So again, and we saw that inflow in ETFs. So I think the opportunity for some short-term upside is more so in silver than in gold. Gold is relatively close to its all-time high. So again, I expect more resistance at that all-time high. We'll look at some ETFs. We've talked about them before. AGQ is the short-term ETF. We like to leverage ETF for short-term moves in silver. And I think, for short-term traders, momentum traders, day traders, I think there's some good opportunity with AGQ and silver. For gold, it's GDXU. So if you get, one of the, you can see we get the pops up and then a retracement pop up. So short term, you could play gold with GDXU. And we saw that bounce in palladium. Looks like it's kind of peaked. Corn popped up, had a futures rollover, declined a bit. Easy Mike, I believe, pointed out that there's a shortage right now, global shortage in rice and in sugar. Caused the sugar price to run up. It looks like it's kind of stabilized in the futures. And then again, we saw the futures roll over in wheat, popped up, kind of peak, get a little bit of a retracement. But I think that will bode positively for wheat. We're still long wheat using the WEAT ETF. So again, I think that trend is positive going forward, and we'll just wait for one of these pops to scalp that WEAT ETF. Again, we've seen the bond prices have been generally running up. We had just a little bit of retracement at the end of the week, but again, the seasonal trend is up. Again, bond yields have been declining to the low 4.4. So, unless we get a Fed hike in December, which the probability is very low at this point, or we get unexpectedly hot inflationary data, which again, I think the expectation is pretty low. I think the trend in bond yields will continue generally downward with some pops occasionally, and then bond prices to continue trending up. So again, we see the foreign currencies. We saw this bounce in the yen. I believe it was confirmed that there was intervention by the Japanese central bank, caused this pop in the yen. Looks like it's retracing. Again, if you want to play these with some of the ETFs we pointed out, well, I'll point those out when we get at our ETF spreadsheet again. Again, opportunities for short-term trading foreign currencies with those ETFs, or if you're actually a Forex trader. I expect we might see that loop back down, and then further intervention possible. So again, we see the dollar's declining back towards that 103 level. That was pretty strong support. Bounce last time there. Lately, it's been 103, 104. So we might get a little bit of a bounce at that 103 level, and then we'll see if there's any economic data, inflationary data that would cause a bounce. Otherwise, it looks like it's rolled over and headed back down. So I hope that all helps. Okay, so we'll look at our ETF Google Sheet, talk about some of the ETFs you can use to trade these opportunities that we've identified. Grab a quick drink. If anybody has a particular category, commodity, index, ETF you'd like to look at in the chat, you can throw those up. We'll take a look at those, as well as some people have mentioned already in our ETF Google Sheet. Just a quick reminder, you can gain 24/7 access to our ETF Google Sheet, as well as our dividend payers and our puts ROIC Google Sheet that we use to identify various opportunities to take advantage of some of these strategies that we've identified, etc. As we see an opportunity, like in the futures we talked about, then we can identify ETFs that we can trade long or short using our ETF Google Sheet with the risk reward profile that fits your trading style, your trading time frame. Just a quick note, I want to look at the screeners, our technology components screener, and I've added ARK-K and TECL to our technology components screener. ARK-K, I'm sure everyone's familiar with. This is the ARK Innovation flagship ETF, so it's the biggest of the ARK ETFs. And again, you can trade ARK long with ARK-K or short with SARK. I also added TECL, which is one we've added to our Google Sheet recently, which is a long leveraged on the technology in general. And you can short this technology sector with TECS, and we'll talk about this in more detail tomorrow. We're looking at a short opportunity in TECS right now, and you'll see why when we go to this the screener ETF. Also, just a reminder, we have a whole series of videos on how you can use these, our ETF Google Sheet, as well as various ETFs in these particular categories in our ETFs playlist. So I'm going to go to screeners. Again, now I've added ARK-K and TECL to our technology components screener. And I found this interesting is ARK-K. We see, FANG U is pretty high, hasn't quite reached its previous high. So these are the FANG stocks, not quite all of the Magnificent Seven, but a majority. But it peaked out a little below its previous high. Looks like it's rolling over a little bit. But we see, ARK-K didn't quite, it broke its nearest term high, but not its, 52-week high. So it's got some more room. Again, it's, difference in composition. See, LabU did break out. It seems a lot weaker, but again, when we get all technology to run, LabU will participate. See, SoxL, again, NVIDIA had positive earnings, positive guidance, a little bit of a China headwind, a little bit of issues with that. So we did see some heavy volatility in NVIDIA. But SoxL, ran strong. Looks like it got close to its previous high, rolled over. TQQQ, again, looks a lot like FANG-U. So again, the NASDAQ's being mostly driven by the Magnificent Seven, the mega cap techs. Again, I found this very interesting, and this is one that we're looking to take an opportunity on. We talked in last week or so and created a separate video on TECL and TECS and the difference between these ETFs and FANG-U and FANG-D. But you can see TECL actually made a new 52-week high and then quickly rolled over. We'll see if we can get another little pop in TECL to short it with TECS. You can see it's got plenty of room, above the moving averages. And again, this is a broader technology, so it's heavily weighted to Apple and Microsoft. So when we get those profit taking in those stocks, that will give us downward pressure on TECL. And thank you again to Crow for identifying TECL and TECS for us. So again, we hope this all helps. And again, you can find this screener in the screeners tab in our ETF Google Sheet. And we'll use some of these other screeners in our strategy to help us identify some cyber market, stock market sales. So quickly go through any other ETFs. We talked about LabU. Again, we've been watching MJ as play the cannabis sector. Talked about China. I saw the Crow likes, yin and yang. Again, short term to long and short China. Talked about some of the Europe. We've got some of those. Talked about FANG-U and FANG-D. So again, you can see FANG-U's got a little bit more room. So FANG-D's got some downside. Talked about GDXU to short-term long gold, short-term short gold miners with GDXD. For natural gas, the long right now is Boyle, short KOLD. So again, you can, day trade, short-term trade, plenty of opportunities, a lot of volatility. Just be careful. You can always also use UNG, UNL for oil, long gush, short drip. So right now oil's been declining, but if it bottoms and you want a short-term trade, a short-term spike like on the OPEC news, gush or UCO are longs, drip or SCO are shorts. We've been talking about retail, RETL, the long. Again, retail's now run up quite a bit. Again, it's the season for retail. When it peaks out, we might look at a possible peak in retail. We might be looking to short brick and mortar stores with EMTY. We talked about that last week. Again, you can long online stores with clicks or online, ONLN. I did hear brick and mortar store traffic was down a little bit, online sales up a little bit. Several of the retailers were not open on Thanksgiving, whereas the past couple years they have been open on Thanksgiving. So maybe once retail has peaked, might be an opportunity to short retail going into either January or February. And we'll be watching and talk about that more as we get closer to the end of the year, probably, because we'll want to hear the Cyber Monday numbers, the Black Friday numbers, the Christmas week numbers. Talked about silver long with AGQ. You can also do junior miners with SILJ. You can get a dividend payer on silver with SLVO. The ETF on sugar is Cane. Again, it's run up with a shortage in silver. We talked about TECS and TECL. So again, we can see that TECL just recently made a new 52-week high and then briefly declined. So we actually have a buyout on TECS. I was hoping it would hit on Wednesday. I was a little bit slow and didn't catch it on Wednesday, which is unfortunate. But we'll try to catch a little pop in TECS and ride that sector rotation down. Again, very short term, because again, I expect we'll get some profit taking in the Magnificent Seven in the FANGs at some point, and then towards the end of the year, I expect we'll get a rotation back into those Magnificent Seven, mega cap techs, etc., for what they call window dressing. So the fund managers are going to want to be able to show that they hold those outperforming tech stocks at the end of the year. So we're just waiting for that profit-taking dip. And again, in my humble opinion, I wouldn't be surprised to see the market makers, etc., try to push those down to give a better buying opportunity towards the end of the year. Again, just my humble opinion. But on that opportunity, I think there's a nice play in TECS. We talked about treasuries. Again, you can play the volatility in treasuries with TBT, TMF, TMB, TMF long, TBT or TMB short. Again, the trend's been up. I do have URNJ, which is the uranium miners, so you can see if there's opportunity there. Looks like, not much risk, not much reward left in there, so they've already caught on to that one. We did have the silver one. I'll look at the lithium one and see. I don't think we have the lithium miners one yet. No, we've got just two, LIT and BAT. I'll look at that lithium miner one and do some research, see if that's one we want to add. So if anyone else in the chat has, so Alan's asking about what do I think OPEC will do relative to oil. I think they're going to stay the course. I think, they're trying to get more participation in the production cuts, and that's some of the disagreement with some of the African countries. But, given that the price has declined, I think they're going to stay the course. I don't think they're going to cut further because then you'd have to have either Saudi Arabia, Russia, or some other country would have to agree to further cuts. And I think, again, there's some disagreement about who's burdened with the current cuts. So I think ultimately they're going to just stay the course through the end of the year, try to keep the oil price bowed up a bit. Again, my humble opinion. Talked about wheat. So again, we're currently long wheat. We also talked about the yen. So if you want to short-term trade the yen, you can long the yen with YCL, short the yen with YCS. Again, we do have other ETFs for the euro, also for the European stock markets, etc. Here's palladium. Again, if you want to try to catch the bottom and bounces in palladium, PALL. Okay, so again, if anybody in the chat has another category you want to look at, we can come back to that. I'm going to get to our strategies very briefly. Let me grab a quick drink and we'll talk about our strategies, trade ideas, etc., to capture some of these Cyber Monday stock market deals. Okay, so again, the theme for this week is to try to find cyber market stock market deals. So how do you find these deals? Well, we've done several previous videos on how to find cheap value stocks in FinBiz, how to find cheap profitable stocks in FinBiz. So I would recommend you view those videos for the detailed step by step on how to find cheap value stocks in FinBiz, cheap profitable stocks in FinBiz, which will help you identify, Cyber Monday stock market deals. We're going to look at one of the screeners that I use for identifying cheap profitable value stocks, which again would be my recommendation for what would be constituted a deal. And you can access this screener as well as a couple others that are referenced in these videos in the screeners tab in our ETF Google Sheet as well. Just a caveat with this, and we'll talk about this more for the rest of the year, is when we are looking for a Cyber Monday stock market deal and we find a cheap value stock, cheap profitable stock, that's going to mean the cheap part means it's going to be down a lot. And if it's down a lot this year, it may be vulnerable to what's called tax loss harvesting, which means someone's going to possibly sell it, capture that loss as to balance any gains they have. So they're going to take that loss in this cheap stock to balance a gain that they have in their other capital gains. And therefore there's a risk that, downside pressure on these cheap stocks. So if you're not familiar with how tax loss harvesting works, we have a video on, what is tax loss harvesting, how does it work? Also, what is the wash sale? There's a 30-day window in which if you sell one of these stocks, you can't buy it back immediately, can't buy back an ETF or something else that has the same stock in it for 30 days. So that's why we'll just start to talk about it. We're starting to enter that 30-day window where, big losers are going to be vulnerable to tax loss harvesting. So again, as you're identifying Cyber Monday stock market deals, be aware of potential risk for tax loss harvesting, which again will be downward pressure on that stock, till the end of the year. And then when we get to January, we'll talk about the January effect and how those tend to bounce as people buy them back when they're outside of the wash sale. So I want to quickly look at this screener. So again, you can find this screener in the screeners tab of our Google Sheet. So you can see, 90% below their 52-week high. So this guy's lost, 90% or more from its 52-week high. So again, why it would be vulnerable to a potential tax loss harvesting. So in this one, again, we're looking at those that are 90% or more below their 52-week high. They're also profitable, so it's got a profitability. PE is greater than 0, so we don't want unprofitable stocks. Again, those are potential zombie stocks. They might not survive, might go bankrupt. So you can see the list. It's relatively short. I didn't see a whole lot of very exciting ones in here, but you can go through them. You can also see the PEs on some of these are very high, which is ones I would stay away from. Some are, Chinese stocks. Or Hong Kong. We don't buy individual stocks in China or Hong Kong. But again, you can use these screeners to help identify cheap profitable stocks as potential Cyber Monday stock market deals. And you can see we have several screeners in the screeners tab, so you can find 75% below their year or 3% above their 52-week low. So again, these are all relatively cheap. I would always recommend selecting profitable. Again, we're not looking at anybody who's losing money. Again, with high interest rates expected to continue for quite some time. Fed keeps telling us higher for longer. If they're losing money and particularly if they have high debt, they're at risk of going out of business. So I hope that all helps. So we also have a number of other strategies we've been talking about, how to make money trading in the fall. You can hear how the markets tend to perform in the fall, best performing sectors and industries. So we've talked about these trends for, several months. We've got, a little bit of time till we get into mid-December, and then we'll start talking about seasonality in terms of the winter. We'll talk about the Santa rally, January effect, etc. Talked about that we've added ARK and TCL to our technology component screener, so we'll continue to watch those. Again, I think I like this TECL as a possible addition for a broader short-term scalping of technology components. So tomorrow we'll also look at our dividend payers ETF or our dividend payers Google Sheet, try to identify dividend payers as further opportunities to generate income while we wait for swing trade opportunities to manifest themselves. We'll talk about some options strategies that we use, again, to generate further income as we wait for swing trades to manifest. So I've got a few minutes. If I missed your question previously, I apologize. And please throw your question back up in the chat, and I'll try to address it. Also, we would love to hear your feedback on how we can continue to improve our weekly trading game plans, our other videos, our Google Sheets, our systems, etc., to add more value for all of our fellow BeachBum traders. You can put that in the comments to this video. We also have a free Discord. You can find a invite to our free Discord in the description box below. We have a suggestion box, or you can just put that in one of the other public channels in our Discord. If you tag us, we're BeachBum Trading, all lowercase, no other characters or numbers or pounds. Again, we'd love your feedback. If you have any other questions, or you have an ETF you would like us to do research on, again, you can put that in the comments to this video in our Discord. Also, we have links to all of our social media sites on our homepage. Our homepage is beachbumtrading.com, bum without the U. And you can also always contact us via any of our social media sites and ask us questions, give us feedback, ask us to do research on further, ETFs, dividend payers, etc. And just checking the chat. If I missed your question, I apologize. Again, if you put it in the comments, etc., we can follow up tomorrow or subsequently, and I'll try to answer your questions. Otherwise, I hope everyone will come back tomorrow at 10 a.m. Eastern Time for part 2 of our weekly trading game plan for the trading week of November 27th through December 1st. We'll be selecting our top swing trading stocks to watch, stocks in our bullpen and our shopping list. Talk again about opportunities with dividend payers and option strategies to generate additional income. And again, we hope you all come back tomorrow for part 2. Thank you again for everyone in the chat for joining us today, everyone watching this video after the fact. We hope that you'll smash the like button, help us get the YouTube algorithm to share this with more traders around the world. We hope you'll share this content with your fellow traders. And we hope you're subscribed to our BeachBum Trading channel. Again, we want to continue to grow our community for the mutual benefit of all of our fellow BeachBum traders. So we appreciate all your help and support. And we hope that you and your family have a great Thanksgiving holiday weekend. We'll see you all back here tomorrow.